Good afternoon. This is Todd Horwitz coming from the floor of the CME Group in Chicago. And of course, we're taking a look at the 30-year U.S. Treasuries. And of course, we've got the same things continue to happen. We're looking for these to continue to fall. We now have yields are rising. And, whether they're rising because of the supply-demand model, for whatever reason, yields have started to rise. And I think what you're looking at here now is a market that's going to push 30-year bonds, 30 U.S. Treasuries down lower, and of course, which would make yields go higher. And of course, we've got this happening. And basically, what has happened, we've had a slight switch, is the Fed has developed more of a hawkish tone here. Now, they may be testing out a little balloon to kind of see if the markets will go ahead and accept that, a little bit of a hawkish tone. So that might be what's going on here. But of course, if you're watching all the banks and everything else, that is telling you that yields are starting to rise, which is putting a lot of pressure on the treasuries. And of course, the 30-year treasuries are now looking like they're going to start to pierce close to that 3% level, and that will continue to push these prices down. I think our job is to look to sell every rally that comes in. I think now our target sell would be 154. Today they've been a little bit flattish, working on both sides of unchanged, but I think if we get a rally to 154, I think that's where we want to sell. I think the right trade in these markets is to be on the short side of these markets. Now, not to be short and chase them down, but short into strength that comes back to some resistance. And I think this is all the determining factors are telling us that the bonds are looking to fall and yields are looking to rise. So we want to take advantage of that, but we don't want to jump too soon. So we want to look to be a seller of rallies. And I think here is 154. And of course, that would be a great level for us to come in, because we've now come down from 158 and got as low as into the 151s, a little bit of a rally back. And then our next target would be down to 150 and then lower. But of course, we do think the markets have turned over and they are now a sell on every rally. That's the way I see it. This is Todd Horwitz coming from the floor of the CME Group in Chicago.